Regarding the markets, what keeps you up at night?
Oh, there's plenty to keep me up at night. Let me first start by saying, and I wrote this in a Barron's piece early in the year, and I was dead wrong with it, but I fundamentally do not see President Trump's personality being compatible in the long run with a 9 or 10 VIX. Let's start with that. I think you have a fairly volatile person at the helm of the world's largest economy. But the markets overlooked that for a while, and that seems to be in the background. But I still keep coming back to that one as the biggest fear I have. As we look on the horizon, there are some events that could move markets. One of the bigger ones is the Jackson Hole Conference, which is coming in later in August. Some years it has some market moving events coming out of it. Other years, not so much. Hard to say in advance, but that is the kind of thing that if the markets are too complacent, some bit of news coming out of that could upset the apple cart a bit. Going forward, you have a Fed meeting in September. There's not that much worry on the interest rate side, but there's some talk and some question about what they might do with the Fed balance sheet. The central bank balance sheets are another thing that could easily turn around and almost by the market. The central banks aren't going to want to impact the markets, but at some point they're going to have no choice. They either have to announce how they're going to shrink their balance sheets, or in the ECB's case, at least stop adding to it. And if the means of how they do it, the speed of how they do it, could be interpreted in a very interesting way by the markets, and that's another big worry. Again, thinking this through, late August in through September into early October are often treacherous times for the market. I don't think that that's really being priced in. The VIX futures curve, of course, does show a little bit of a lift, but that's sort of a normal state of affairs for the VIX curve. As you look at the futures out a few weeks or a couple months, they tend to always be higher than the spot, unless there are real times of stress. So we're not in backwardation. That's not unusual, but it's all out there. There's of course the geopolitical. I don't know what's going to happen in North Korea. I certainly hope nothing, but it could get more tense before it abates. All this stuff, though, seems to be kind of getting ignored. And then, of course, I've kind of buried the lead. The biggest one of all is the debt ceiling and how Congress is going to resolve that. At current rates, the U.S. is going to have to do something late September, early October, depending on when the debt ceiling is reached. Congress does not appear to be in the kind of mood that makes me think that this is going to go too swimmingly, because the Republicans, although they have the majorities in both houses, they're sort of split between the camps that don't ever want to raise the deficit under any circumstances, or raise the debt ceiling, those who want to put on all kinds of conditions, and those who just really don't want the apple cart disrupted. So even though you have one party controlling both houses of Congress and the presidency, they may not all be pulling the oars at the same time. If that happens, that could have real nasty ramifications. Starting in the Treasury bond market, we have seen some backwardation in the Treasury curve from time to time, where short-term rates are actually reflecting the possibility of a hiccup. I don't think it really hurts the full faith and credit of the U.S. in the long term, but that's the sort of nasty worries that could really get the market thinking along a different way, or at least getting out of its slumber of continual low volatility and continual just higher grind.